Bitcoin just erupted above 106K while central banks worldwide pivot on rates. Could your portfolio be next? Today is the 9th June, and welcome to your daily crypto and macro news. Bitcoin ignited across crypto markets today, exploding back into the spotlight at just over 108K, driven by rising institutional demand and a surge in US equity markets. Over the weekend alone, Bitcoin climbed roughly 1.2%, reaching a key psychological level while now flirting with 110K amid technical bullish signals. On-chain analytics reveal that wallets holding over 1 BTC have increased by 12%, a signal of accumulation among whales. This momentum aligns with a compelling breakout technical pattern. Bitcoin is forming an ascending triangle, with resistance near 73K, 2-week average, and strong support from the 200-day moving average. Many chart technicians are calling this a golden cross scenario, suggesting a 70 to 170% upside if macroeconomic variables stay favorable. But it's not just crypto markets stirring. Today's macro news is rewriting the global economic script. In the US, the New York Fed's monthly survey of consumer expectations for May showed a drop in inflation expectations across all timeframes. 1 year down to 3.2%, with the 3-year to looking at 3%, and the 5-year dropping to 2.6%. Consumers are less anxious about inflation, improved job perceptions are boosting sentiment, and households are expecting higher incomes. Markets are now betting the Fed will hold rates at 4.25 to 4.5% at its June 18th FOMC meeting. At the same time, US-China trade talks resumed in London, focusing on rare earth mineral exports crucial to tech and manufacturing. The political angle? A diplomatic handshake might ease tariff risks and soothe medium-term inflation. Meanwhile, the ECB just completed its 8th straight quarter-point rate cut, bringing its deposit rate to 2%, and signals it might pause there given inflation is nearing the 2% mark. Yet policymakers warn tariffs and rising wage costs could threaten the recovery. In India, the Reserve Bank of India surprised everyone with a jumbo repo rate cut and a 100-point CRR reduction, signaling serious efforts to re-accelerate growth. Across the Eurozone, Spain trimmed its 2025 GDP forecast to 2.4%, noting the drag from global trade war uncertainty. So what does this stellar run in Bitcoin mean in the bigger picture? Analysts point out that these are classic risk-on conditions: cooling inflation expectations, stable US rates, central bank easing in Europe and India, plus resumed trade diplomacy. When extra dollars flood markets turned deal-dependent, risk assets, stocks, commodities, crypto boiled. Bitcoin's 30-day correlation with the S&P 500 is running at 0.68 to 0.78, a level seen in late-cycle rallies. More traders are using BTC as a hedge against traditional markets, especially amid rising 30-year mortgage rates in the US, which just jumped back above 7%. Yet, looking ahead, this week brings a packed economic calendar. CPI on Wednesday, PPI Thursday, initial jobless claims on Thursday, and University of Michigan sentiment Friday, all of which could shake macro sentiment and prompt quick moves in both crypto and bond markets. Final take: Bitcoin is experiencing a bullish catalyst mix. Technical breakouts, accumulation, and macro tailwinds. But caution is warranted. Upcoming data could shift sentiment, and volatility remains high. That golden cross rally could ignite or fizzle if data disappoints. For investors, that means staying nimble. Scale into your positions, watch macro triggers, and keep an eye on technical pivot levels. If CPI or PPI surprise to the upside or trade talks falter, risk assets may reimburse gains. As central banks smartly pivot, Bitcoin may be readying for a breakout Olympics, provided the economic air stays bullish. If you found this valuable, make sure to subscribe and hit the bell so you never miss the macro moves shaping Bitcoin's next breakout.